The table we are looking at right now is Italy's imports of coffee from all exporters. The next section refers to the performance of the supplying country's exports to the world for the analyzed product. Specifically, this section contains the following columns. First, a ranking of partner countries in world exports according to exported value. For example, in this case, Brazil is ranked number 1, which means it is the world's largest exporter of coffee, excluding roasted and decaffeinated, at the same time being also the largest supplier to Italy. If we look at Vietnam, the same trend happens, being the second largest supplier for both the whole world and for Italy. India and Uganda are 11th and 12th respectively in the world. However, they are Italy's 3rd and 4th suppliers for this product. On the other hand, Colombia is 3rd in the world, but is only the 6th largest supplier for Italy. This column allows you to understand whether the particular importing country is buying from the world's largest suppliers of the product or not. But there may be many reasons why a country's suppliers differ from the top suppliers in the world. For example, language and cultural similarities, preferential trade agreements, or geographical proximity that increase the likelihood for two countries of trading with each other. The second column in this section shows the share of partner countries in world exports of the selected product. It complements the previous column on supplier ranking by indicating the world market share of each supplier. For example, we see that Brazil is the world's top supplier and Colombia is ranked 3rd. But we see a big difference in their share in world exports, with Brazil accounting for 22.9%, compared with Colombia's 11.9%, almost doubling the participation. One should, however, bear in mind when interpreting the data that some countries appearing as large exporters may indeed not be the original producing countries, but rather countries with large ports or processing facilities. In this case, for example, Belgium is ranked as the 9th largest exporter, although the country might not be growing coffee due to its geographical location and weather. Therefore, it is important to examine in more detail the countries supplying to markets like Belgium to better understand the global supply of coffee. The last column in this section is the total export growth in value of partner countries between 2014 and 2018. It shows the average annual growth over the last 5 years in value of the partner countries' exports to the world. This gives an indication of the performance of the supplying country's exports and can be compared with Italy's import growth from this partner to see if the partner country is targeting Italy more than other markets. Looking at Uganda, for example, their exports of coffee, excluding roasted and decaffeinated, to the world grew by 5%, but to Italy, their exports grew by 8%. This means the country has been focusing on the Italian market. The final section is, as described for the previous table, the average equivalent ad valorem tariffs applied by the importing country, in this case Italy, to imports of the product coming from the partner countries. This allows you to identify whether your country enjoys a tariff advantage or disadvantage relative to other supplying countries, and hence provides another indicator of the competitiveness of your country's exports in the target market. Here, for example, we can see that Italy applies 0 tariffs to countries supplying coffee, excluding roasted and decaffeinated. For a detailed explanation of ad valorem equivalents, please review the tutorials on Market Access Map. Remember, however, that ad valorem equivalents typically showed on this column are still an average of the tariffs applied to the detailed products within the 6-digit cluster selected. We would always need to check the tariffs at the tariff line level to be sure of any competitive advantage in tariffs rates applied. Finally, we can observe that Italy's total imports of coffee, excluding roasted and decaffeinated, are $1.49 billion, and the trade balance is a negative $1.46 billion, which means that Italy exports about $30 million worth of the selected product. It is interesting to see that at the HS4-digit level, 0901 coffee, whether or not roasted or decaffeinated, Italy's trade balance has a negative balance of $52 million US. It clearly means that Italy imports non-roasted coffee and exports roasted coffee.